Hey guys, welcome back to a brand new video. I'm RexFinance, and golly, I am sore from doing that thumbnail. Your eyes did not deceive you. That was not some Photoshop deal there. I literally did a handstand and took a timer photo on my phone. I am sore. I just don't bounce back like I used to. I'm 22 years old now, just getting too old for this stuff. But believe it or not, the NASDAQ actually had a red day. I feel like we should celebrate this because that just never happens. In fact, leave a like for the NASDAQ having a red day. Now, yeah, it was only red by 8 pennies or 0.021%. Not by a whole lot. But we did have a lot of high growth stocks sell off big time today. The NASDAQ was its own deal. CleanSpark, which I made a video on yesterday, is down 7.6%. Great timing. Makes me look so smart when I make a video about a company and the next day it's down 7.6%. Insane, but year to date, the company is up 243%. So this pullback really isn't that surprising. CleanSpark stock has been running very, very hot. Workhorse is another stock I've been talking about quite a bit on my channel lately, down 10% today, but this too has had a heck of a ride lately. From lows, Workhorse was up 40%. And there's a lot of stocks out there that acted this way today. Stocks that have been running very, very hot, giving investors tremendous returns, just kind of sold off today, 5 to 6 to 7 to even 10% in some cases. All this was routine profit taking before the weekend. Whenever you have a really, really good run or a really, really good week, it's not uncommon to see stocks sell off on Friday, especially if they are stocks that outperform the markets tremendously. People like to take their gains in before they lose them. They don't want to hold those gains over the weekend. And so far, year to date, the NASDAQ is up 43.33%. The NASDAQ alone is on pace for an 80% year. You heard that right, 80%. The NASDAQ is on track to basically double investors' money in 12 months alone. But we can't lose sight of the fact that just last year, the NASDAQ sold off 35% in just under a year. We're not yet back to all-time highs, but if you ask me, I believe that over the course of the next 2 to 3 to 4 months, the NASDAQ will set a new all-time high. This 43% year-to-date return is basically the result of all of the bears slowly admitting that they were wrong about the economy and about this imminent recession. We kind of thought that this would come. Bears kept kicking this recession can down the road, saying it's going to happen in the first half of 2022, but that didn't happen. So then they said, oh, the second half of 2022, it's going to happen. But then that didn't happen, so they said the first half of 2023 for sure is going to be a recession. And, well, we're sitting here on July 14th at 5:06 p.m. as I'm recording this video, and we didn't get a first half of 2023 recession either. So I actually believe that most investors, whether bearish or bullish, have admitted to this fact that the economy is very, very strong and is very, very resilient. Back in 2022, when the stock market was selling off like crazy, I was just one of a few bulls left in the stock market that believed that the economy was strong and that the data would stay strong. And obviously, since the middle of October, more bulls have joined this train as more data has come in. And just recently, this extreme rally we just saw, I think, is a result of bears kind of throwing in the towel. Okay, I was wrong. The economy is really, really strong. I'm a poet and I didn't even know it. But basically, up until the last month or so, bears were calling this rally delusional, which delusional rallies can happen in the stock market, in a bear market specifically. We can have these ridiculous rallies that make no sense, but bears were just blinded. They completely ignored the data that was saying the economy was very, very strong and in a very, very healthy place. And part of their problem, oh man, Culver's looks good right now. Part of their problem was they bet more than $1 trillion against U.S. stocks after their big run. This article was put out on June 22nd. I covered this in a previous video, but I want to revisit it because that video I published didn't get put into the algorithm for some reason. But hey, if you want to watch it, click the I in the top right-hand corner. But the article explained that U.S. short interest this month rose to the highest level since April of 2022 as investors bet that the current bull run in the stock market was set to falter. This was these investors' thesis, that the bull market was set to falter. If you asked them why, they would have said, well, because the bull market has ran so far already. They wouldn't have given you any economic data to back this. And against big tech alone, Tesla, Apple, Microsoft, Nvidia, and Amazon, the collective short interest was over $83 billion. So this blow-off rally we've seen, or this melt-up rally we've seen, has been this liquidation of this over $1 trillion short in the market. And we're officially in earnings season now, where we're going to get an update from companies about how their business is looking, how their customers are looking, how consumers as a whole are looking. And we had PepsiCo yesterday report their earnings, and what did they do? They rose their full year guidance following strong second quarter. The stock rose after an earnings beat and guidance boost. PepsiCo's stock gained after beating estimates. And we also had Delta Airlines report their earnings. Delta lifts guidance as travel boom is here to stay. Consumers have money. Consumers are spending money. And this is the final nail in the coffin for bears. This is why they're throwing in the towel and admitting the economy is very strong and staying very resilient. I mean, just look at this headline. This has been overlooked. Amazon's Prime Day was the biggest in company history. Biggest ever Prime Day boosts U.S. online sales to $12.7 billion. This is not signaling that we have a struggling consumer. And we've already seen the bear argument start to change from saying a recession is imminent, so I'm not going to be in the stock market, to now saying the economy is going to be too strong, so the Fed is going to have to raise rates to a place where it manufactures a recession. I'm seeing this sort of commentary everywhere on CNBC, the bears I watch on YouTube. They're all starting to say this, that the economy is too strong to fully defeat inflation. But I don't think this argument's going to last very long either, because, well, you all saw the CPI data we got. It came in below expectations. Sure, maybe you think they're doctoring the data, but there's one thing that you can't refute, and it's this. Shelter inflation makes up 40% of the CPI basket. 40%. And it's one of the only areas left where inflation has remained sticky. What happens as rent inflation and shelter inflation continues to cool off? Because we know currently shelter inflation, it's gone. We're disinflating, if not deflating, when it comes to shelter right now and rent prices. The reason that it's not showing up in the CPI data yet is because typically you only renew leases once a year. So that data doesn't come into the CPI data until after a year has passed. But we can see this based on May's data and June's data. We have hit a peak for shelter inflation. This is going to come back down to 2%, 3%, 4%. And that includes rent of shelter, owner's equivalent rent, and tenant occupied rent. So 40% of the total CPI basket has yet to really disinflate. And we're already sitting at a 4.8% core CPI rate. What happens as this falls? It's pretty obvious. Inflation is going to go back to the 2% target that the Fed has, if not below it. And if it does trend lower than that, we might see some Fed rate cuts come out, but that remains to be seen. But more importantly, I was kind of surprised at the Fed's most recent Summary of Economic Projections, or SEP. They don't expect to get close to their inflation target until 2025. This is all of the Fed presidents putting their votes in. And they think there's another 2 years where we're going to be fighting inflation before they get to 2.2% inflation year over year. Inevitably, the Fed's going to have to change this projection. And what happens to the stock market when they do that? When the next SEP comes out, the stock market will rally like no other, because that would mean the Fed is signaling that they have won this battle against inflation. So if the economy remains strong, the bears' argument for that is out the window already. If inflation comes down, which we know it will, because rent inflation and shelter inflation is going to disinflate and deflate for the rest of the year, whenever we get CPI releases, that argument's out of the window. So what do bears have left to stand on? Really not much. The bulls' thesis right now is just too strong. Everything is going right for the bulls, whether you like it or not. Nothing is going right for the bears. Now, there'll come a time when that flips on its head, where, yes, we need to be bearish again because signs are pointing and telling us that, yeah, it's time to get bearish, but that is not right now. It's not. And yes, I think more profit taking after this huge rally is likely, but I think finding a top anytime soon in this stock market is very unlikely. I'll throw up on the screen a couple of comments that I got on my video from a couple days ago. These comments came from two bulls that watch my channel, and they're telling me to be cautious. And if you look on any stock market forum or Twitter, the bears are still very, very angry. We don't find a top in the stock market until that changes, until bulls are no longer cautious and until bears are no longer angry. We need everybody to be throwing all of their money into the markets in order for us to find a top. And quite honestly, we're nowhere close to that right now. But with that, I'm going to end this video here. We uploaded 5 videos in 5 days. I don't remember the last time I did that, but we're going to keep this going. I'm going to take the weekend off. So I hope you guys have a great weekend. Stay blessed. Keep 10 toes to the ground. Keep your chin up. Peace out.